the TTR show, as we call it, Trader Talk Radio show for 2022. I think this is 12 consecutive years now. We've run it through one organisation or another. We've run free market analysis for those that wish to attend. And thank you to the many of you that continue to attend, and I hope you get plenty of value from this. We'll be without Orlando today, who is away with some illness. He is recovering, but not able to get a video through to us in time. So we've got Linka with us, and we are waiting for Ash to join us reasonably soon. I'll give him another message to make sure he's not too far away. It's a busy old market, and one that still doesn't appear quite done for the year to me. I mean, to be fair, I'm in an existing trade from November, but no plans to manage that at this point. It's a let go strategy, but really I'm not looking to enter anything else at this stage of the year. We're well into to sort of the wind down session normally, but the market continues to motor along. Linka, what are you seeing in the market as far as market analysis goes? What are you seeing? What do you think will happen in the next week or so? And at what stage do you think traders need to just jump out of the market and have a break?
Yeah, hi everyone. Hi, Paul. So I am still looking for trades, usually on the shorter time frame. But yeah, I will be finishing up before Christmas. So I'm not really sure if there is a good time. Sometimes the market, is still good especially in the new year. But between the breaks, I usually don't trade. So yeah, unless it's really on the shorter time frames. But I'm going to show some trade setups that I'm looking for next week. I'll share my screen. All right, so what I'm looking for here is a short on GBP USD at the moment. What I'm seeing is on the monthly, that bar hasn't closed, but we're at the top of the previous range where there was levels of support. On the weekly, I had a couple of closes above, but now a close below with a strong rejection of that MR1 level and closed below within the range there. So I'm looking for short from the top of that range to possibly the monthly pivot or the bottom of the range there. On the daily, what I have is basically two closes below the 10 EMA and also the weekly pivot and also within the range. In addition, here I have a stochastic divergence for a bearish one, so that's looking for short. So I have these higher tops here, 1, 2, 3, and on the stochastic I have lower 1, 2, 3. So I'm looking for that to now potentially reverse and go short again on this to the monthly pivot. So on the 4-hourly time frame, what I'm looking for is any pullback, and then we have sort of that double top there. So looking for a lower high. What ideally I would like to see is the market to go a little bit further down past this point here. So that past this point there, if it would close below before that pullback, and then I would look for the short opportunity setup after that. So that is GBP USD. Next one I'm looking at is AUD USD, and here I'm also looking at a short opportunity. So here on the monthly, again, this last bar is not closed, but we're pretty much on the top of that range. So I'm looking at that going further down. Let's have a look on the weekly. On the weekly, we have a touch point at that top of that channel, which has rejected that level. And therefore, that's indicating to me that it would be going short. It is not quite closed within that previous range and below that previous low. So there is still a potential that could just turn around and go further up. But the type of setup they'll be looking for is short here. Again, this is the daily time frame. So you had a couple of closes below, but not quite below that previous low. So would be looking for the price to go below or potentially open below that on Monday, then pull back and then look for the short opportunity after that. So on the 4 hourly, that would be, let's say below here. So if we open below that level or the bar goes below and then does the pullback, then I would be looking for short opportunities there. Okay. Next one is GBP JPY. And here I'm looking for short opportunities. On the monthly, we're at the top of that previous channel. Already came down, but it's still in an uptrend. So this one is potentially not going with the trend because the trend is up, but looking for a short pullback in the opposite direction. On weekly, we also had a rejection of the top level. We already had 1, 2, 3 rejections. Then we had a false break and close below, and then another weekly rejection there. So, and with a close below the monthly pivot and also below the EMA. So looking for that to then continue further down to the bottom of that channel. On the daily, price action is not that great. We only have one close below and no proper pattern, so that is not very interesting there. However, on the 4 hourly, we have a high, a low, a lower high, and now a lower low, and therefore I'm looking for a reversal at around this point here as a lower high, and therefore going short. In saying that, because it is in the opposite direction to the trend, then it would likely be a shorter time frame or lower risk to reward ratio trade. Next one is Euro AUD, and Euro AUD here I'm looking for long opportunities. On the monthly, this I was looking for shorts before, but now that we've got that close above, I may be looking for long if that continues in that direction. So what I would be looking for here is on the daily, we have a low, a high, a higher low, and now a higher high. So therefore, I'm looking for a pullback. And if it remains above that previous level of resistance and becomes support, then I'm looking for long opportunities there. Also here on the 4 hourly, looking for that price to basically pull back. And if it does reverse, they're looking for long opportunities there. Only because the trend, it's basically been going up. So unless there is a false break and a retest underneath that level, then would be looking at long opportunities for now. The next currency pair, and this is the last one, is Euro GBP. And Euro GBP, I'm actually looking for short on this one. So we are currently within the previous channel. So this is the monthly chart. That last bar is not yet closed. On the weekly, we had a massive weekly engulfing bar close in the top quarter of that range, so it's back up at the previous high levels. On the daily, we've had a pushback from that top trend where it was a high, a low, a lower high, and equal pretty much low. So now looking for that again to push away from that and go lower. On the 4-hour, we also have a false break and a retest of that weekly resistance, WR3. So if tomorrow we have the price go lower, then I would be looking for short. The first profit target would be before these levels, just in case it reverses there. So some partial profit, otherwise just continuing down to, say, the weekly pivot or the top of that range. So that is short term for Euro GBP. And that is all from me. Thank you very much.
Cheers, Linka. Thank you very much for that, and thank you for analysis during the year. Have a great Christmas and New Year. I understand we'll see you back in early February. Thank you for everything you've done this year. Much
That's
appreciated
right.
by us all.
Thank you, Paul.
Thank you. Look, let's go to Ash. Ash, you with us?
Yep, certainly am, mate. Here we are in the cold.
Mate, we're talking, hey, mate, last one of the year. We're talking footsie. And, mate, been technically pretty good, hasn't it? Pushed off some recent highs, gave a bit of a drop back, and all of a sudden, Thursday, Friday, got a bit more serious about it. All of a sudden, there's a bit more intent to the selling than we'd seen recently.
Absolutely is, and it's a tricky one at this time of year because the liquidity comes out of the market, which means that some of these moves are just a little bit more accentuated. And it's been interesting because the driver of the global equities right now is pretty much down to the Fed. But up until this point, the market has effectively said, we don't believe you. We don't think that you are going to be able to hold firm and keep interest rates at a higher rate. We think that you're going to reverse. And that's what's kept the markets elevated. It kept the NASDAQ elevated, it kept the S&P elevated, and it's kept the FTSE elevated. But as you say, all of a sudden on Friday, big drop down. And if you look at the dollar, which you do need to do if you're going to be looking at things like equity. So if you look at the dollar index, just starting to find a potential bottom in this area here. So this is really key. Watching out what happens to the dollar here. You can see that it's through this level here. So if the dollar continues to push to the upside, and it will depend on where the weekly pivot is, if this continues to push to the upside, which I think it's got a pretty good chance of doing, the FTSE will probably continue to push to the downside. Now, this is the 4 hours. So this suggests that we need a test of this point here. There is a head and shoulders pattern, which has already played out. If we look at this head and shoulders pattern here, we've got the left shoulder there, there's the head there, and there is the right shoulder there. And this is, as I say, this has already played out really, because if we measure the head and shoulders pattern, even if we're quite generous, it's probably something around about there. And that looks to be the measured move on the head and shoulders, which is played out pretty much to the pip down here, and it's just starting to reverse again. So now what we're looking for with a head and shoulders, now the move has played out. The first move to the downside has played out. We're looking for a retracement and for some sort of reversal signal in here to see if we're going to get much lower. And when I look at the FTSE, I do see that there is a pretty good chance that we could actually reach some weekly levels. So I'm looking down on the dailies to start with, and you can see this level here is quite an interesting point. That's at 71.83. We're currently at 73.50, let's call it. So another couple of hundred pips to the downside, which is going to be right about another 3% move to the downside in the FTSE, 2.5-3% move. And as I say, if you look at this on the weekly, then you'll see that the line's a little bit cleaner. It's just a little bit clearer to see. There's some support over here. It was resistance, a little bit messy in here as it kind of jostled between the two areas, but it was again resistance there, support there. So this looks like the area to me, somewhere around about that 7180, 7200 level for the FTSE to pull back. And we are looking like we're headed for a recession. And it really does depend now whether that recession starts to gather some pace. What's been really interesting about what we've seen so far is the central banks have had the ability to raise interest rates, and the economy is not crashing. It's weakening, but it's not crashing. China's opening up again, which could add problems. It could go one of two ways. It could add some demand, which would push the price of oil back up again. And if the price of oil starts to go back up again, then we'll see the FTSE start to improve because of some of the major stocks in the FTSE 100, Shell and BP. So that's going to help the FTSE out. If copper and some mining stocks do well, so copper and mining materials do well in China as well because they're opening up, that will also push the likes of Rio Tinto, Anglo America, and some of the other bigger names in the FTSE up as well. So the FTSE's in okay shape with that. The problem is that if the recession picture gathers pace, then all of a sudden the major manufacturer of the planet will not have a customer to sell to, because the United States, as an example, will be closing up their doors and saying, we don't need your stuff. We got a recession and people aren't buying anymore. So the China opening could go, as I say, one of two ways. It could really increase inflation because demand picks up, or it may have a negative effect because the demand picks up in China, but it might actually decrease it because the supply picks up as well, because they can start to produce goods. But then that might be counterbalanced with a lack of demand if there's a global recession. So the FTSE's in a little bit of balance, but I would suggest that we need to see some downside before we can start picking this up again. I mean, every single time the FTSE's come up to this 7,700-ish level, it's rejected that point. And with global recession looming, it would be, I think, a wild speculation to suggest that we're going through those levels. So equities on the whole look like they're going to weaken, and the FTSE is probably going to be one of the ones that does it as well. I have to say, though, I don't think it's going to be the worst. I think the Nasdaq is still probably going to suffer the most, and I think that there's a chance that you might actually see some of the European equities doing poorly as well because of the rhetoric from the ECB. And if you really want to pick the best equity to short, if you go to the currency and see which currency has the major strength, then you can equate that to the equity that's going to have the greatest weakness. So the pound is probably not going to do particularly well this next year, which means the FTSE will probably not weaken quite as much. The dollar and the euro, I think the jury's out on which is the stronger, which means that the Nasdaq and the DAX particularly will probably do quite badly. So I'm looking out for, I guess, things to hedge the FTSE against, because if I was to take a short in the DAX or short in the Nasdaq, I'd probably use the FTSE to long it against, because I think it's probably going to outperform, certainly for the first half of next year anyway. So for right now, yes, we're looking for weakness, but the bigger picture is the FTSE may not be the weakest of all the equities.
Cheers, mate. Interesting stuff as we look at markets, particularly stock markets, mate. They are very much fundamentally driven at this point, and we have Alexis coming in to talk fundamentals to us. Thank you very much for the FTSE, Ash. And again, Merry Christmas to you, and thank you for your contribution to the year. I think we'll see you back on the 29th of January when we're back with market analysis.
See you then, guys. Have a good Christmas.
Cheers, mate. Enjoy. Alexis, what's happening fundamentally? Still a lot going on for us in the world of fundamentals at the moment.
Yeah, definitely a lot going on. I think I'm just going to share the screen and let's take a look at some of the numbers that have come up. So a whole bunch of interest rate increases has happened. It's not quite neat yet because I haven't quite finished it, but I'm just going to share this chart. So if it's just this part, look at, hang on, let me just remove the colors for now. And just look at all the interest rate increases. So we had US increases interest rates to 0.5. I'm going to blow this up a little bit. 200%. Okay. So I think the interesting part was almost everyone increased their interest rates, right? We had the US increased 0.5, the Euro followed with 0.5, the UK 0.5, Canada 0.5, Australia a little bit more conservative, 0.25, China also 0.5, Singapore 0.4, sorry, Switzerland 0.5, and Singapore 0.45. So basically, everybody increased its interest rates. I think that was what I think the message that we're going to get is this fight with inflation, really strong fight. So if you look at the numbers, okay, this is this side, all right. So we have the US at 4.5% inflation. That's the highest at the moment, followed really closely by the New Zealand 4.25 and Canada as well 4.25. And we have the UK 3.5, which means that the UK still has, I mean, it doesn't have the highest interest rate, but what it does imply that it has room for increments, right? And we also, of course, Euro 2.5. And I think if we look at the news that's coming out from the Euro side, they said that they're not quite done yet in terms of their interest rate increments. So I think we can expect more increments in the Euro as well coming to 2023, given that their inflation is still one of the highest, the second highest, in fact. In terms of inflation, UK currently has the highest inflation at 10.7. So if I'm looking for the usual fundamental diversion of, let's just pick strongest versus weakest, right? The UK, unfortunately, isn't looking quite the best because it has a 3.5% interest rate, which is not the highest, but it's above 3%, is really quite high already. And yet its inflation is not going anywhere. It's 10.7. True, it did drop a little bit. It was worse before. It was almost 11 in the previous reading. It's improved a little bit, but it's still a very high 10.7. The euro might be in a little bit of a question mark as well. It's 10.10. And the previous reading is actually 10. So actually the euro's inflation has worsened by 0.1 percentage point, which again, it might not be a big thing, but it's the question is, are their interest rates actually effective in bringing down inflation? So I think next, the story in 2023, it's still going to be the fight of inflation. And I think on the back of this, the oil prices, the energy prices, then it rolls back down to, the conflict in Ukraine, which I think everybody has kind of, I wouldn't say forgotten about it, but if you're not quite there, it's around in the background because that story has not ended yet. It's still going on. But I think we're so desensitized to the conflict over there that if we don't go and look at it, we kind of forget it's still there. And that is one of the big question mark of this whole supply demand issue of commodities of necessities, right? We have the wheat from Ukraine, we have the oil from Russia. So there's this whole question mark that we can't quite see very clearly. So I think my gearing towards 2023, it's to kind of stick to the more stable currencies. I will be looking to trade currencies like the Japanese yen, the Swiss, where the governments have already made some kind of decision on where they want to go. The euro and the US, I'm not too sure about the euro in the sense that I think it's a little bit too close to the conflict, which means it can fluctuate and is very, very sensitive to commodity prices at this point. So my take for the closer to the conflict currencies will be shorter term trades. The longer term trades will be those which is slightly more stable, the further away currencies. So I'm actually looking at Australia, New Zealand, Singapore, and US. There's no choice. Everybody has got to look at US. But these are the currencies that I will focus on in 2023, given that if the market does change, if we are in a recession, it does mean that there's a new trend coming. It's just a matter of a bear trend or a bull trend. All right. So I think what I am prepared to be going into 2023 is to look up for that elusive turning point. Because again, I think we have been looking at this for quite a while. A lot of the currency pairs, they are overextended, right? Every single currency pair we go to, let me just pull out to the weekly time frame. I think at least half of the currency pairs, they're all at one end or the other. Some have already started moving in a couple of weeks. All right, if we look at the Aussie dollar, all right, it's bounced off. I think this is like the last couple of months. It's already started bouncing off the sort of one extreme. All right. I mean, again, it really depends on China again. So I think there is opportunity to find a trend coming 2023 when it's either we're in a recession and something is just going to go one direction, or alternatively, it can be like what Japan is doing now, nothing, and go sideways. All right. So I think it's going to be really interesting 2023 next year. I'm definitely looking for pound weakness. All right. I know it doesn't seem quite so on the chart. That looks like a really strong bullish pound dollar move in the last, I think, 2-3 months. All right. But I do have a technical level that I'm looking at. And my question mark is, will the pound start to weaken? Because, in terms of inflation, in terms of unemployment, it's not quite recovering as best as its US counterpart. So I'm looking for weakness in those statistics. All right. The Swiss, I think we're going to, let me just take a look at dollar Swiss. The Swiss is a really interesting currency pair. This is a weekly time frame. All right. And in the last, I think, last month, if you look at this weekly candle, it actually lost it's a huge breakdown candle. Really, really huge breakdown candle. My question is, will it start to stabilize over here? Because the statistics from the Swiss side, it's still pretty decent, I would say. So will it start to stabilize here? Will we find a new trend here, or will it continue to break down to the bottom? So this is one of the currency pairs where it is a little bit more into the extremes. I am looking for opportunities, to find either a breakup or a breakdown, depending again on where the market moves. But again, dollar Swiss is not my favorite pair to trade. I rather take a look at the Swiss yen, only because the Japanese has not been doing anything. All right, they're still status quo. Now the only problem is we have had this whole entire 2 months of sideways motion. All right, but the question is, it's already gone so high up. So if Japan chooses to do something different next year, all right, they choose to change the monetary policy next year or something else, then we will see a huge move one way or the other. It's a question of when will it break out. So I think opportunities are coming because there's a lot of consolidation, there's a lot of overextensions, so we just have to be a bit patient and wait for the governments to make up their minds. And once that monetary policy is decided on, I'm just going to pick strongest versus weakest. And on my strongest list for now, it's unfortunately still the dollar because it is a global currency. The Swiss, the dollar are two of my currencies I would like to look at as strongest. And on the bottom of the spectrum is the Japanese yen. I don't think, unless they change the monetary policy, is the Japanese yen. And probably I would say this is just the three currencies I'm looking at. The rest, I think, just trade your strategy and just use your technical analysis. From a fundamental perspective, it's big question marks, all right? We have to wait for things to settle down before we can have a fundamental play on those. Yeah, that's all for me, Paul.
Cheers, Alexis. Thank you very much. And always great to have a bit of a fundamental look at the market. We've seen some analysis on the FTSE, some analysis on price action and the market in general. And that will wrap us up for TTR, Trader Talk Radio, the analysis show for 2022. We'll be back on the 29th of January with the team, and we'll run out our program at that stage for the rest of the year. But you'll see us back every Sunday around this time from the 29th of January. Alexis, Merry Christmas to you. Thank you. You've had a massive year for us. Thanks for your contribution. It's been much appreciated. And to all of you that are in the watching us this time, enjoy your Christmas break. And I do encourage you to have a bit of a break over Christmas. Liquidity is down and markets get quite choppy. I know if you're working full time, you get to Christmas and you want to just trade, but it's a tough time to trade. So do be careful. Make sure you control your risk. It's the answer to everything. And thank you, Catherine. And do have a wonderful Christmas and New Year. If you're part of the Actions to Wealth group, we are having a little Christmas wind-up webinar about 6 o'clock on Thursday night. So you're welcome. You'll have a link for that. You're welcome to join us on Thursday night at 6. If you're part of the Bali Trading Retreat, we're doing a bit of a recap on that, a bit of a review on that on Wednesday night as well. So if you were there, make sure you join us for that as well. In the meantime, have a good Christmas. Stay calm. Make good decisions. It all works out if you do. Thank you very much for your support. Cheers, everyone. Merry Christmas. Happy New Year to you all.